Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The bruised Australian dollar managed to stage a rebound overnight after hitting an intraday low of 67.36, and from the close has posted a dragonfly doji. This type of candlestick is relatively easy to spot due to its unique T shape, which is the result of a trading day that opens on a downtrend and then reverses in time to close right near the opening price, as you can see here. Now from the open today the market is now looking towards a resistance of 67.75 and could stretch up towards 68.20.35 because this candlestick, as I mentioned, is bullish and we are oversold and therefore does warrant for a short-term correction before re-establishing the move back towards the lower side of the range of 67.05.15 and a base, if we look at the weeklies, that comes in right across here at 66.60.70. The euro also declined and found support right in front of the level of 109.55.85 after posting an intraday low of 109.97. This is a hammer and is viewed as a bullish candle. Looking ahead, we still have the US Federal Reserve rate decision and widely expected to see rates kept on hold. If so, then we have to see what the statement has to reveal, as this is the first for this year. And from recent comments when we view back in December and November, was that the Fed was expected to keep rates on hold for most of this year. The dollar yen case found a little bit of momentum after its 5-day bearish streak was snapped. Now, from the technical point, in this case, there's no bullish candle, unlike we can see with the dragonfly on the Australian dollar and the bullish hammer that we can see on the euro. Therefore, I do anticipate further weakness. Although there has been some ease to the coronavirus, but there has been a large amount of numbers reported, with 4,515 people infected from reports, and also at least 106 lives have been taken. Technically though, I still feel that the fears are just around the corner and therefore safe haven demand could be triggered again and therefore see a move with the target remaining at 108.20 to 40. The pound, well, the market is now waiting for Super Thursday, and what I mean by Super Thursday is that we've got the Bank of England rate decision and therefore could see a 50-50 chance of a rate cut as the MPC members are mixed. Along with that is this Friday is the final stage to Britain pulling out of the EU after 3 years of back and forth negotiations that have failed, but this time it looks like we will see a final departure between the two sides. From a technical point, since the bearish outside range day, there is a little bit of negative still holding for the pound, and I do look towards 129.80 as a break, and then maybe down to the crucial level, 129.10.30. Do note beneath here exposes the region down towards 124, so quite a big drop. Gold is taking a bit of a breather as from this doji that you can see here, it now puts the risk back towards the support region of 1,560. It is from that level, between 60 to 63 that is, that we could see a rebound. I'm not getting too far away from the bullish sentiment, as the risk is safe haven demand could still be and will most doubtly be returning, and therefore could see the rise up towards the recent of 1,588 and on towards the 7-year highs around 1,600. I did note that there was possible bull base coming in around $50.5 to $51.5 a barrel. What we've seen for the first time after this stretch of declines is the market stays the recovery overnight. Still a bit more work to do. If we can get a move above the level of $54.60-65, then we could see the recapture to $57. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day.